What are we expecting, Steve?
Well, we have companies gaining and those who are feeling the pain, obviously. Let's start with the pain and Xiaomi. This is a company that's had a bit of a torturous year because early on we saw that briefly they had become the world's #2 smartphone maker, even surpassing Apple. But they've come on hard times with the overall regulatory environment on big tech kind of suppressing advertising spending and other areas. But it's really the chip components, the chip shortage and the component shortage because of the supply chain constraints globally that really hitting Xiaomi. This is a company that had high double-digit shipment growth for the previous 4 quarters. Until this just completed calendar third quarter, they saw a fall in shipments of 4.6%. They're just not getting enough chips and components to ship, to meet the demand that is potentially there in the smartphone market. They also have increased competition from the likes of Honor, which is the smartphone maker offshoot of Huawei. But essentially, this is what Wang Xiang, the president of Xiaomi, said on the conference call. He said, we faced fairly big pressure in the third quarter from chip shortages. This will continue in the fourth quarter, but will ease in 2022. He went on to clarify that it's likely not to ease until the second half of 2022. Essentially, the earnings sales growth slowed considerably to just 8% growth. It was 64% in the previous quarter growth. So a significant markdown. Also, net income plummeted 84%, big investment losses because of the slowing economy and the other headwinds against big tech. But Alibaba, Tencent, and the other companies have also had big write-downs on their investments. All right, let's switch to the gain, and that is EV maker Xpeng. Obviously, there's been huge pain for chip shortages across the automobile sector and the technology sector, and this is a company that bridges both of those worlds. However, this is what Brian Gu, the president of Xpeng, said. We achieved strong growth momentum despite challenges of semiconductor shortages, revenue beat forecasts, and also detailed expanded plans to expand in Europe and double down on self-driving cars. This is an industry, the auto industry, lost a combined $210 billion in lost production, but it's been a banner year for Chinese EV makers. EV sales in 2021 in line to more than double 2020 levels to 3 million total units, not for Xpeng, but total in China. So they are doing well, and the stock represented that overnight. The ADRs up 8.25%.
And Steve, when it comes to Kuaishou, they have been just one of the worst performers of the new IPOs this year, right? But in terms of the regulatory impact, what was it for those numbers?
Well, yeah, as far as the stock performance, it's lost $170 billion in market value this year, kind of, caught up in the whole dragnet, even though it has not specifically been targeted. Well, we're seeing Xiaomi. We need to bring up Kuaishou here. Sales beat estimates, revenue up 33%. Net loss was narrower than the consensus. So it's defying those regulatory headwinds as well. It's going on a spending spree and really relying heavily on these influence peddlers, celebrities going and doing video streaming of products. That has benefited them as well. But again, the backdrop is, and the big question investors want to know, when are we going to see a turning point for big tech, whether it is Alibaba, whether it's Tencent, whether it's Pinduoduo, whether it's Meituan, and Kuaishou as well. It had a big IPO, of course, and a lot of fanfare as it takes on ByteDance and TikTok/Douyin. But again, it's been a painful year on the stock market for this company because of the regulatory issues.